So they steal the Chinese steal our ideas and refine them, and the Japanese, to some degree, I suppose, do it too. Intellectual property is probably the biggest piece of these negotiations going forward, and very few people are talking about it. But it's a big point, and there, I think that's when this tariff issue boils down to something that nobody's talking about, which is you're an American company and you want to go deal with the Chinese, but it means giving them all your trade secrets. And you don't have to do it in America. And at some point, some CEOs are going to have to look at this and say, what's the value of our intellectual property, and to what extent are we trading it away for Chinese market share? And I think that's a big piece of these negotiations. And that's where the stumbling block is. China doesn't want to give up on that, because they've made a living eating our lunch for many, many years. And I think that's where that brick.
Hey everybody, welcome back again to Markets and Madness, the place where we discuss the madness that occurs when politics, economics, and personalities all move in different directions. We've gotten some new subscribers. We appreciate that. We're always looking for new subscribers. We're always looking for comments, likes, do all of the above, and we certainly would appreciate it. So having said that, Tim and I today, a lot to talk about, and he can't talk. So it should be an interesting session. Good morning, Tim.
Hi there, Fred. I'm a little under the weather, folks.
Yeah.
But I'll do what I can.
Okay. So we've had an interesting week. We haven't been on for a week now, and a lot's going on. We've had huge down days in the stock market, big up days, reversals, trend changes in the dollar overall. The bond market's in question. China is the focus on everybody's tongue. What do you think?
I think we caught this pretty well. You identified it when you said we're in a period of two-way risk now. Just stepping back a few weeks ago, people were buying this market with impunity, no sense of downside risk at all. Now we've got a sense of downside risk. So I think I said last week or week before we're in a trading range, and we could do that. You could fade the exuberant moves in either direction, I think.
And the trading range has gotten wider. That's all.
Yeah, but there still are bombs out there. One is the Middle East, I think. I don't think anybody's paying attention to that at all. And it sounds to me like the ball's in Iran's court with respect to whether or not Israel goes in with all weapons. There's been all kinds of reports. Some I've heard directly, and some I've read in the press, that we're outfitting the Israeli bombers with bumper busters. So it looks like, depending on what's going on at the table and the discussions, you may see Israel decide enough is enough. There was a report that Netanyahu was talked back from getting ready to strike a week ago. These are things that are just hanging out there, and they have huge implications for the oil markets and gold, and U.S. Treasuries with respect to a flight to quality. And you've got sectors that'll benefit from that, something like General Dynamics or the defense sectors. I see Boeing has found a bid, but that's basically tariff related, which is where all the focus has been. The focus has been tariffs, and then to a lesser extent, whether or not Powell will move and whether or not he'll be pushed. And I've turned a little bit on that. A week ago, I felt that an ease wasn't appropriate by Powell. I think it might be in line with some of the real estate numbers that we've seen coming out. Sales, it looks like the economy is slacking off, and maybe an ease might be appropriate. It'll be interesting if he does ease to see what happens to the 10-year and whether or not that responds. I think the market response to a Powell action is more important than the action itself.
Yeah. Yeah, we always felt that if it was, my comments anyway last week were if he was easing to underpin the stock market, then it was it was the wrong call. But if he's easing to protect the weakening economy, then it's probably the right call.
Yeah. And, we got used for a decade or so of negative interest rates. So these rates look abnormally high with respect to rates in real terms. You get a real return, which to us is average. I mean, it's what we saw for the last 20 years or so. But all of a sudden, the last decade, we saw negative rates, and we've got a market that feels the rates are too high if they're average, which is where we are now. If you,
President feels the same way.
yeah, exactly, he does.
Yeah.
But you would expect that from the administration, any administration. But if you exhumed Volcker now and put him in a Fed seat, he would say, "There's nothing wrong with these rates. These are fine. I'm giving investors a return. It's a real rate of return. Everything's fine." Since Greenspan, that's all changed. We had Greenspan, then we had Yellen. You know, so we've had
Bernanke, yeah, helicopter
Bernanke.
Ben,
Yeah, that's right. I
in the
forgot
middle of
about it.
that.
So we've had an overly aggressive Fed on the downside, with certain periods of, hey, wait a minute, you better do something about this inflation. It's out of control.
And a lot of people say that the administration is trying to politicize the Fed, but I think Powell did that to himself last year. Easing in front of the election when it was questionable, and now he's putting up a hardline stance when I don't know. It just seems like the Fed to me has politicized itself and brought on all of this.
And he's that little move to transition just basically destroyed his image. You know, uh, just watching inflation go out of control, looking at that obscene, what they call it, inflation reduction package,
That's right.
looking at that, and then watching inflation explode, and then saying, well, this is transitional. No, $6 trillion in the economy is by no means transitional. And Yellen used the same word, and you could tell that they were told to say that.
Right. Yeah. From what we're seeing now, it's a lot of people were told to say a lot of things. Whether it was the media, whether it was the social media, the
We're back.
historic media. Yeah.
We're back to that theme that I concluded about 25 years ago, that people have confused economics with politics.
Yeah.
I mean, if your political bent is one way, you see all these things from one prism, and it's very hard to be objective.
Mhm.
That's one thing I respect about markets. Markets tend to be more, they're not completely absent of bias, political bias, but they tend to be more objective in terms of where we think we're going.
Welcome to the Northeast. Um, we just briefly touched on China, but I think there's a lot of back and forth there. You have a lot of people saying that Trump has caved, that Besant got to him and said the economy is going to crash if you don't walk back some of this talk. What do you think there? I mean, do you think he's made his point and now it's time to try to get to the negotiating table, or do you think there's more to it?
I'd like to think that we know, but we really don't know what's being said behind closed doors. So all of these public statements are made to support statements that are made in a conference room someplace. So we got to take this with a grain of salt until an actual statement is made. A lot of this is all part of the manipulation.
Yeah, you mentioned earlier Israel, Iran, troubles in the Middle East. Gold is what, $65 a barrel now?
Oil, I mean.
Oil. Could we see 90? Is it gonna 50%?
If I saw that, I would fade it. If I saw a spike in oil like that, I would fade it because it would be short term in nature.
Right.
We're going to drill.
Does it make sense to do so you wouldn't look to do the risk reversals then? You would not look to buy the upside, sell the downside. You're still negative on oil long term, and if it spikes up there, you think that's
Yeah,
an opportunity to buy the puts.
that's the way I feel.
Put some orders in to sell puts much
I would
higher.
rush. I would rush to get long oil. Number one, we got a weakening economy, and demand is slacking, and it's not just us; it's global. These tariffs got everybody confused. We've got this whole restructuring of the U.S. economy with respect to moving from public sector to private sector. So we've got a lot of depressants here, and we've been bearish since the beginning of the year. Short term, meaning medium term, within a 6 to 1 year time horizon, and it's worked out. Our advice has been go hide out in bonds, and that's been a great place to be. If you locked in
Yeah.
4 and 3 quarters,
Except for the last week or two where it's, people got a little skittish about the,
I think it's an opportunity to add.
yeah. Yeah,
Yeah,
I bought some TLT calls a couple of weeks ago, and they have a lot of time to run, and they were cheap.
I
You know,
don't see any reason for inflation to come back here. I mean, the big argument was tariffs, inflationary, and maybe that's what's putting a wrinkle on bonds. Uh, but we've seen a lot of foreign selling of bonds as a response to the tariff argument. But you could see a flight to quality. If the Mideast blows up, people will get worried, number one, about inflation because oil prices would spike. But I would fade that.
how long does it take to get those rigs online in the U.S.? If we were going to do that, if there was going to be some problems in the Middle East, and we were going to start to maximize production, do you have any idea?
You're taxing my knowledge of that. I do recall that if prices got low enough, and I'm talking about below 40, people started to cap wells. And if you get to that point, yeah, then the time horizons really stretch out. It takes a longer time to uncap and resurrect those wells. But we're nowhere near that. We could get there, though.
Interesting. And gold, to me, gold seems a little frothy. I've been a big supporter of gold. Had GLD in my portfolio, geez, for the last, I guess, 5, 8 years now. And I don't necessarily add to it, but I sleep well at night knowing that I have it. Just talking to someone this morning, and he says every day I wake up and GLD is my best performing um, piece of the portfolio. And I said, yeah, but I think over the last week now, it's had such a meteoric rise. It's been such a one-way trade that I think it's getting a little crowded. Um,
I wouldn't argue with that, but there's two markets that confuse the shit out of me all the time, and it's oil and it's crypto. Sorry, it's gold and it's crypto. Uh, like you, I get gold positions. I'm in the miners, not so much the GLD, the actual physical. I got to get this just a second. I would
so
have raised quantum computing. So this
go
rally
on.
we're looking at here. So this rally we're looking at here has really been a Nasdaq rally. You know, Nasdaq has outperformed Dow and S&P 2 to 1 almost. And inside Nasdaq, we've been seeing some good news on some quantum computing stocks, and Palantir has really flown as well. So
Mhm.
that sector is looking nice. It's dragging the whole queue up. But we got two-way risk. That's the issue.
Yeah, and I think 2 weeks ago we talked about selling the downside for strong companies, and if you get given, you earn some good premium to buy those stocks at good
Talk about
levels.
writing the puts.
Yeah,
Yeah, that's
selling the
good.
puts on the
Yeah.
selling the downside. And now I think I'm ultimately 1 year, 2 year bullish on stocks in the U.S. overall, and I think it's a good time to do what I call risk reversals. People call them collars, condors. I sell the downside puts and buy the upside calls. If you could do it for cheap, or in some cases earn a credit. If the market collapses and you could buy some of these stocks at good levels, that's a great opportunity. And if it does take off, and you get that 15-20% rally like people are, always expecting, then you're in it at reasonable levels for next to nothing.
Those positions have worked for me, but only in cases where you're comfortable buying the stock lower down.
Exactly. Yeah. That's what I'm saying. Good, solid companies where I wouldn't just throw it out left and right. I'm still kind of bearish on private equity. I know they go into every different field, and there's so much money flowing into them. And I would have thought this whole debacle with Harvard and all of these universities that have so much money tied up in private equity, I would have thought that would really hit those markets, but I guess not yet. Still has some time.
Yeah, well, I think the jury's out on whether or not they're going to lose that funding.
Some people saw something on Facebook the other day. A guy says, take the money you were going to give to Harvard, send it to trade schools.
Yeah, I saw that.
Yeah.
I saw that.
It's
I'd
a
like to
good
see
comment.
that. I think I'd
Yeah.
like to see that.
The world needs plumbers and carpenters and electricians to make a very good life.
Well, I guess I was talking to somebody. Uh, he listens to NPR, and he had NPR on the radio. And I generally, I love this guy, but I generally don't have a conversation with him because it's liable to lead to friction. He doesn't really like to lead it. And he was a Harvard guy, too. And he said, what do you think here? And I said, well, you can have an economy where all the jobs and the job growth is done in the public sector. But that means it's got to be funded by the taxpayer. And if there's not enough tax dollars, which there never is, then they've either got to borrow it and the debt goes up, or they got to print it and inflation goes up. So those are not really good options. I would rather see a policy that encourages risk takers, meaning a lower capital gains tax policy, where risk takers come in and fund the growth. But then you get a business cycle. You get recessions
Ups and
and they go
downs.
back. Yeah.
Yep.
So if you want to repeal the business cycle, you can do it, but only for short periods of time, and it blows up in your face in the end. And
Well,
soon
we
you
certainly,
got
we,
trillion-dollar interest payments and debt in the stratosphere, and there's no way out of that.
you mentioned Bernanke and Greenspan earlier. They've tried to do it over the last 20 plus years, eliminate the business
Well,
cycle.
yeah, we started to hear, this, what's the term that they were using? Was saying that it's a new economy, and I never bought it. I still don't buy it, and I don't think Trump buys it. So we seem to be going back to that. Anyway, I made this point to this guy, and he said something interesting. He said, well, we really won't get manufacturing back in the U.S. no matter what we do. He said, we could go, it could be 10 years before we get a manufacturing base, and we're not going to have it. We can't compete with low-cost producers with the wages. And that's a fair point. But I said, have you ever had a blue-collar job? Have you ever worked in a plant or anything like that? He said, no. I said, well, I didn't do a lot of that, but I had some exposure to that. And it's all computers now. It's all technology. Technology's changed a lot of that hand and blue-collar work, but these guys are basically technologists, They're operating computers, and they're setting computers with, drill presses being done
Robots.
electronically. Yeah. And so we lead in that. We could do that. This is not the 40s and the 50s where you had to put manpower in and, you had a riveter and that kind, those years are gone. I certainly am not an expert in that area, but I would like to talk to an expert in that area and see what it's like. I can only think, I used to have when I was married, my ex-wife had a cousin called Klaus, and he was a machinist. And this was a guy who bought a Corvette after he came out of the Army. He was an Austrian, came out of the Army, he was in the U.S. Army, and he sold his Corvette and he bought a lathe, a metal lathe, and built a company out of that machine. I think he got like $4 or $5 grand for his Corvette in the 50s or the 60s, early 60s. And it was an American dream kind of situation. And I got a feeling if I talked to him now, he'd say, well, it's all computerized. Where I used to sit with a caliper and try to figure out what the measurement, now it's all gone now. Computers do all of that. So we've got this vision of the manufacturing industry that I'm sure is gone.
Yeah, I guess it's a small percentage of what it was. That there's still steel workers that need to come in and get their hands dirty, and there's still some of that, but nowhere near to what it was.
Yeah.
And I always go back to a book I read 25 years ago, Tom Friedman, The World is Flat, and he interviewed one of the CEOs of a production company in Asia, one of the tigers. And he said, "How do you feel about stealing all U.S. ideas? How do you feel about that?" And the guy said, "Well, that's our job. You as Americans, your job, and the West as a whole, your job is to come up with the next new idea, and our job is to refine production." And that's been the thinking for the last 25 years.
Well, that's Japanese.
It
Yeah.
wasn't Japanese. This was like Singapore or Taiwan or something like that. Yeah.
Well, you're bordering on my chopstick theory. Have you ever seen a Chinese chopstick? It's round and porcelain. Ever seen a
Yeah.
Japanese chopstick? It's square and wood,
And wood.
right?
Yeah.
So and the Chinese alphabet has thousands of characters. Yep, the Japanese have what, 16, 30, something like that. So the Japanese culture looks at something and refines it. So that's an Asian culture.
Yeah.
To look at it and refine it. So they steal the Chinese steal our ideas and refine them, and
Yeah.
the Japanese, to some degree, I suppose, do it too. Intellectual property is probably the biggest piece of these negotiations going forward, and very few people are talking about it. But it's a big point, and
Yeah.
there, I think that's when this tariff issue boils down to something that nobody's talking about, which is you're an American company and you want to go deal with the Chinese, but it means giving them all your trade secrets. And you don't have to do it in America. And at some point, some CEOs are going to have to look at this and say, what's the value of our intellectual property? And to what extent are we trading it away for Chinese market share? And I think that's a big piece of these negotiations. And that's where the stumbling block is. China doesn't want to give up on that
Right.
because they've made a living eating our lunch for many, many years. And I think that's where that brick wall is.
Yeah, it's going to be interesting to see how this plays out. Who comes to the table, whether this was Trump flinching or this was part of his overall negotiation. He's going to tell you it was part of his overall negotiation. Right?
Well, I mean, it's got to be.
Yeah.
You know, you can see what he does. He throws these ridiculous numbers up, and then he backs off and looks good. I mean, he's negotiating it. You've done it. I've done it. I mean, you ever bought a car?
Yeah.
You got to do it.
Yeah. You throw it out.
I'm leaving. I'm leaving. I'm walking out of the room.
That's right. That's right. All right. Well, I guess that's about it. We got to see how this all plays out over the next couple of days, couple of weeks. And we have what's interesting now is I think Saturday, Trump is going to Italy for the Pope's funeral. And somebody asked him yesterday, "You going to have meetings?" He's got lots of meetings planned.
Zelensky wants to see him, and I don't think he's going to see Zelensky. He's going to tell him to shit and get off the
He's been
pot.
getting some pushback, but he reached out to Putin this morning, or I don't know, according to the things I saw on social media, that he's told Putin that's bad timing. What you did in Kiev is wrong. So he's
Yeah.
admonishing him. Yeah, there was there was bombings overnight by the Russians, and I think he called him to task. What that means, where it's going to go, I don't know. But I think he's, on the trade front, I think he's going to have a lot of the leaders in Italy at the Pope's funeral, and they're going to have time to sit down and have an espresso and a Negroni and discuss some issues that they have to deal with. Yeah.
I think he's a little too fat to sit on a bike.
That's
I don't want to
the
see that
Vespa.
image. I hope they don't show that.
Sitting on the Vespa, traveling with Sophia Loren on his back, and his scarf waving.
Okay.
All right, Tim, feel better. Talk to you soon. Yep.